this is an unusual situation to get, some data late during blackout, pretty close, very close to our meeting. Very unusual to one that would actually change the outcome. So I've only seen, in my 10 years plus here at the Fed, I've only seen something like that, even close to that, 1 or 2 times. So I don't think it's something that'll come up a great deal.
Good. That's good news, guys. That's good news.
Thank you so much for taking our questions. Colby Smith with the Financial Times. On the clear and convincing threshold for the inflation trajectory, what is the level of realized inflation that meets that criteria? And how is the committee thinking about the potential trade-off of much higher unemployment?
Okay, importante yan, ha? Importante to. Romel, baka sumabog to, ha?
If inflation is not moderated.
Maganda yung tanong.
So, the second part I didn't get.
What's the potential trade-off with higher unemployment than even what's forecasted in the SEP if inflation is not moderating at an acceptable pace?
Let's go.
So, what we want to see is a series of declining monthly readings for inflation.
Okay.
And we'd like to see inflation headed down. So, but and right now our policy rate is well below neutral, right? So, soon enough we'll have our policy rate. Let's assume the world works about like the SEP says. The policy rate will be up where we think it should be. And then the question would be, do you slow down? Does it make you,
running profit as of now? Good news. That's good. $134 running profit on gold. There you go. I'm closing that. I'm closing there. Okay, close.
Again, we're looking, ultimately, we're not going to declare victory until we see.
Nice one, Paul.
Galing. Nice. Ganda ng talong eh. Kasi about the soft inflation nga, kailangan i-flatten muna talaga yon. If hindi nila magagawa ng paraan yan, then there's no way na mapapababa nila yon.
Okay, we think this job is done.
Nice.
Because we saw, frankly, last year, inflation came down over the course of the summer and then turned right around and went back up. So I think we're going to be careful about declaring victory. But again, the implementation of our policies is going to be flexible.
Good morning sa inyo. Okay, good morning sa FOMC News. So as of now, we are profitable of $200+ guys in just trading this FOMC, guys. Grabe.
So again, I think that
Grabe.
I do think that their objective, and this is what's reflected in the SEP, that our objective really is to bring inflation down to 2%.
2%?
While the labor market remains strong. I think that what's becoming more clear is that many factors that we don't control are going to play a very significant role in deciding whether that's possible or not. And there I'm thinking, of course, of commodity prices, the war in Ukraine, supply chain, things like that, where we really can't. The monetary policy stance doesn't affect those things. So, but having said that, there is a path. There's a path for us to get there. It's not getting easier. It's getting more challenging because of these external forces, and that path is to move demand down, and you have a lot of surplus demand in take for example in the labor market. So you have 2 job vacancies essentially for every person actively seeking a job, and that has led to a real imbalance in wage negotiating. You could get to a place where that ratio was at a more normal
level. Ka pa, Romel, no?
You would expect to see those wage pressures move back down to levels. People still get healthy wage increases, real wage increases, but at a level that's consistent with 2% inflation. So that's a possibility, and you could say the same thing about some of the product markets where there's just excess capacity, and where the strong demand has gone into where they're capacity constrained, right? So you have effectively what we think of as a vertical supply curve or close to it. So demand comes in.
Next question, outplacing long position on gold.
Not more cars because they can't make the cars.
So sorry kung hindi ko na mapapakita sa inyo, guys. Sobrang bilis na to.
That could work in reverse.
Ayoko magkamali dito sa FOMC News na to.
You could see, and it's not guaranteed, but you could see prices coming down more than the typical economic relationships that you see in the textbooks would suggest because of the unusual situation we're in on the supply side. So there's a pathway there.
Okay.
It is not going to be easy, and you know, again, it's our objective, but as I mentioned, it's going to depend to some extent on factors we don't control.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. So the new projections show the unemployment rate ticking up through 2024. Is a higher unemployment rate necessary in order to combat inflation? And what is lost if the unemployment rate has to go up and people lose their jobs in order to control inflation? Thank you.
So you're right. In the SEP, we have unemployment going up to 4. The median is 4.1%. There, of course, a range of actual forecasts. And I would characterize that if you were to get inflation down to, you know, on its way down to 2%, and the unemployment rate went up to 4.1%, that's still a, you know, historically low level. You know, we hadn't seen unemployment rates below 4% until a couple of years ago. We'd seen it for like 1 year in the last 50. So the idea that, you know, 3.6% is historically low in the last century. So a 4.1% unemployment rate with inflation well on its way to 2%, I think that would be I think that would be a successful outcome. So we're not looking to have a higher unemployment rate, but I would say that I would certainly look at that as a successful outcome. You know, we don't seek to put people out of work. Of course, we never think too many people are working and fewer people need to have jobs. But we also think that you really cannot have the kind of labor market we want without price stability. And we have to go back and establish price stability so we can have that kind of labor market. And that's a labor market where you know, where workers are getting wage increases. Maybe the workers at the lower end of the spectrum are getting the biggest wage increases, as they were before the pandemic. Where participation is high, where there's lots of job opportunities, where it's just the labor market we had before the pandemic that's what we want to get back to. And you see, you know, disparities between various groups at historic lows. We'd love to get back to that place. But to get there, it's not going to happen with the levels of inflation we have. So we have to restore that, and it really is in service in the medium and longer term of the kind of labor market we want and hope to achieve.
Naku, langanin yun.
Hi, Chair Powell, Matthew Bosa with Bloomberg. So, as you just mentioned, the committee is now projecting a 0.5 percentage point rise in the unemployment rate and the SEPs over the next couple of years, and it removed a line from its policy statement about thinking that the labor market can remain strong while it tightens policy. You just mentioned that is still your objective, though, so I'm wondering if you could explain why that line was removed from the statement, and also whether this means the FOMC is trying to induce a recession now.
Ayun na! Ayun na! Recession na, nabanggit na.
Recession now. Let's be clear about that. We're trying to achieve 2% inflation consistent with a strong labor market. That's what we're trying to do. So let me talk about that.
Dininay!
Clearly, it's our goal to bring about 2% inflation while keeping the labor market strong, right? And that's kind of what the SEP says. That the SEP has inflation getting down to a little above 2% in 2024 with unemployment at 4.1%. So, and this is a strong labor market. This is a good labor market.
Dininay niya?
And as I mentioned, there are pathways to do it.
Recession.
Those pathways have become much more challenging due to factors that are not under our control.
Di bullish yun.
Of the fallout from the war.
Hindi niya pa inaamin eh.
Which has brought a spike.
So I think I'm placing long position here on gold.
Fertilizer, industrial chemicals, and also just the supply chains more broadly, which have been larger and longer lasting.
Negative $3, negative $10, $13 negative, $28 negative, $47 negative, and boom.
The result of
boom
2% inflation with a strong labor market, and so much of it is really not down to monetary policy. It just didn't. It just the sentence isn't. It kind of says on its face that monetary policy alone.
Oh shit, Romel.
And that's not. That just didn't seem.
Sasabog to.
given the new projections for the unemployment rate, could you talk a little bit about what accounts for, such reduced confidence against, say, a month ago or 3 months ago that inflation will largely normalize on its own as these supply side issues?
Okay, guys, I'm running profit of $22, 39, 40, 56.
And we didn't get that. We got sort of the opposite. So I also think the situation really since the consequences
Ready
of
for
the
that?
Ukraine
Close
war
pool.
become more and more
Okay,
clear.
I'm close
What
muna.
you're
I'm close,
seeing
I'm
is
close.
the situation getting more difficult. And you look around the world. I mean, lots of countries are
$34
lots of
profit,
countries are
okay na
looking
yun.
at inflation of 10%.
Waiting ako sa
And
next
it's
question.
largely due to commodities
Dinilay
prices,
niya yung
but
ano eh,
all over the world.
yung recession eh.
You are seeing these effects, and we're seeing them here. Gas prices, all-time highs and things like that. That's not something we can do something about. So that is really. And by the way, headline inflation is important for expectations.
Isa pang may
People-
magtanong about
the public's
recession, sasabog tong
expectations.
si lahat,
Why
as
would
in
they
lahat.
be distinguishing between core inflation and headline inflation? Core inflation is something we think about because it is a better predictor of future inflation. But headline inflation is what people experience. They don't know what core is. Why would they? They have no reason to.
Tama,
So
tama.
that's expectations are very much at risk due to high headline inflation. So it's become, the environment has become more difficult, clearly, in the last 4 or 5 months. And hence the need for the policy actions that we took today, hence our resolution to get rates up and ultimately get them to where we think they need to be in coming months.
Yun. Ano yun?
Thanks, Chair Powell. Edward Lawrence with Fox Business. I want to ask you, you talked about CPI going to 8.6%.
Ito na, CPI, guys.
The market by falling, and then revisions to the previous months were down. Are you hearing from contacts about consumers slowing spending or changing their habits?
So we're of course watching very, very carefully.
I'm long.
Looking at the retail sale, the big store.
Romel, wag mo i-close yung position mo yan. Ahabulin kita niya.
Tol. What we see is
Dito pa
you
ako.
see continuing shifts in consumption. You see some things
There we go.
the sales going down.
Negative
Overall,
$32, negative
spending is very
10,
strong.
40.
The consumer's in really good shape
36.
financially.
Let's go.
They're spending. There's no sign of a broader slowdown that I can see in the economy. People are talking about it a lot. Consumer confidence is very low. That's probably related to gas prices, and also just stock prices to some extent.
Boom!
For people. But that's
Sabog!
what we're seeing. We're not seeing a broad slowdown. We see
Ah,
job growth.
oh shit,
slowing, but
okay.
still
We're running profit of $12, 13,
We
14,
see the economy
58,
slowing a bit, but still
5,
growth
10,
levels, healthy
13.
growth levels.
Back to
Raising rates in this economy, how
Let's go.
closely are you watching consumer spending, or is there something, another indicator that you're watching more closely?
It would be hard to watch anything much more
Hindi,
closely
dapat wala
than
siyang
we watch
masagot dyan kasi
consumer
wala
spending.
ma-indicate.
But we watch everything. We watch business fixed investment, which actually has softened a bit. We're responsible for watching everything. But consumption is 60-some% of the economy, 2/3 of the economy. So naturally, we spend a lot of time on that. And again, there's a lot going on. There are a lot of flows back
Walang
and forth, but
indicator.
ultimately,
Tandaan nyo, walang indicator na kaya makapag-predict
it
nun.
does appear that
Only
US
the economy
is
growth.
in a strong
Yun lang.
position
Kung ano lang yung
and well
kinakaya ng
positioned
economy,
to-
yun lang yun.
to deal with higher interest rates.
Oh shit!
Thank you, Mr. Chairman. Mike McKee from Bloomberg Radio and Television. Are you targeting headline inflation now or core inflation? In other words,
Core inflation, yung ma'am.
how far would you chase
Let's
oil
let's
prices
take a look at
if
ma'am,
they
guys.
keep going up, if that's going to be the component that drives expectations? Would you risk recession for a headline
Ayan na!
rate if
Recession!
the rate is holding steady or starting to go down?
So we're responsible for inflation in the law.
Not
And inflation is
recession.
headline inflation. So that's our ultimate goal. We, of course, like all central banks do, look very, very carefully at core inflation because it's a much better predictor, and it's a much better predictor of where inflation is going, and it's also more relevant to our tools. As I mentioned, the parts that don't go into core are mostly outside the scope of our tools, so we look at that. But the current situation is particularly difficult because of what I mentioned about expectations. We can't affect. Really, I mean, the energy prices are set by global commodity prices. And most of food, not all of it, but most food prices are pretty heavily influenced by global commodity prices too, also other things. So we can't really have much of an effect, but we have to be mindful of the potential effect on inflation expectations from headlines. So it's a very difficult situation to be in. And we can't do much
okay,
about,
guys.
The difference between
$24 profit and closing full here. There we go. Wait lang.
No,
Let's
just
take a look.
as a follow-up,
The
bit of
25, 30.
clarification on
Bang!
the
Another
SEP.
$32.
When the
Another
members
$32.
gave their forecasts, when were they inserted into the record? Were they revised after the CPI or Michigan numbers came out? In other words, does the SEP as we have it now reflect the same factors that led you to go to a 75 basis point move?
The SEP is
okay, good.
It reflects all of the economic readings. It also reflects the 75 basis point increase. This is important. So people had that.
Basta ganun lang yun, guys, no? Alam ko, babatuhan nila to ng maraming recession na eh. Alam ko, babatuhan nila to ng maraming recession questions. If i-deny niya na mapupunta na ng recession, or if i-deny niya yung inflation is magiging, yung inflation rate is maapektuhan nyo, inflation rate yung makakapag-boost para sa recession, para magkaroon tayo ng agadang recession. Pag dinideny niya yon, sasabog yan. Pero pag inaccept niya yung fact na may recession na, babagsak lahat yan.
Started front-loading rate hikes more. You've talked about how you want to see inflation coming down over a series of reports, and I guess I'm curious whether you think inflation data itself is a really good indicator, or whether you might be concerned that it's a lagging indicator, or that it might send confusing signals, given that, as you talked about, there are sort of supply and demand aspects. And I guess my question is, do you think that inflation will tell you, inflation data will tell you when you've gone to where you need to go, or do you just feel like maybe it's better to overshoot than to undershoot?
Okay, I'm waiting.
So, I think the role that we can play, maybe the way to get at it is to say that the role that we can play is around demand, right?
Demand.
So,
I'm going long position right here.
The areas that we can affect are those that are associated with excess demand. And we'll be able to see our effect on, for example, job openings in real time. So and that would tell us about wage switch, not principally responsible for the inflation that we're seeing. But going forward, they would be very important, particularly in the service sector.
So, tinatanong siya kung good lagging indicator daw ba yung inflation?
Sorry, I'm not sure I'm getting to your question.
Oh shit!
My question is inflation data itself the best indicator for when you're getting to where you need to go, or
might be a lagging indicator?
There's always a risk of going too far or going not far enough. And it's going to be a very difficult judgment to make, or maybe not. Maybe it'll be really clear. But we're quite mindful of the dangers. But
yes, guys, we're trading gold and S&P 500. Walang kahit anong crypto, walang halong crypto to. Okay, yung tinitrade namin is pure gold lang po. Okay, gold lang po yan. Okay, gold. So, hindi niya masabi na ang inflation rate daw is a good indicator para malaman natin.
Being eaten up. So, we want to get the job done. This inflation happened relatively recently. We don't think that it's affecting expectations in any kind of fundamental way. We don't think that we're seeing a wage price spiral. We think that the public generally sees us as very likely to be successful in getting inflation down to 2%, and that's critical. It's absolutely key to the whole thing that we sustain that confidence. So that's how we're thinking about it.
Hindi niya masabi.
Hindi niya masabi. Finance. I just want to expand, I guess, on what you just said now about the general public feeling like, you can get this done. When you talk about consumer sentiment being down, household inflation expectations being up, recession being dinner table talk, does the general feel among American households and also businesses square with your explanation of the economy, given that the description of inflation in the statement didn't change between May and June? Thanks.
So, clearly, people don't like inflation a lot, and many people are experiencing it really for the first time, because we haven't had anything like this kind of inflation in 40 years. And
40 years, guys, diba?
It's really something people don't like, and they're experiencing that, and that's showing up in surveys and in all kinds of ways. And we understand that, and we understand the hardship that people are experiencing from high inflation, and we're determined to do what we can to get inflation back down. So that's really what we're saying. Clearly, it's an incredibly unpopular thing, and it's very painful for people. So, I guess what I'm saying is the question, really critical question from the perspective of doing
running profit $1
is making sure
$2
that the public does have confidence.
$3
that we have the tools and we'll use them, and they do work to bring inflation
I'm
back
closing
down
$2 guys.
over time. It will take some time, we think, to get inflation
Close
back
pool.
down, but we will do that.
Okay na. $2.
Thank you. Chris Rugaber at Associated Press. You have talked about inflation a few times and mentioned oil prices, China lockdowns. But aside from rises in commodity prices such as gas prices, we're also seeing stickier measures of inflation increasing, such as the Cleveland Fed's median and trimmed mean CPIs. I mean, how persistent do you see those underlying measures of inflation, and how do you expect to, and where do you see those going in the near future?
Yeah. So, as I mentioned, I think in my opening statement, the inflation has started off in quite narrow, very directly pandemic-related areas, and it's spread now broadly across the economy and into the services sector as well. It was really in the goods sector at the beginning. In particular, you're seeing in travel now, if you've flown on a plane lately, planes are very full and plane tickets are very expensive. Some of that will be passed through with energy prices, but you're experiencing services inflation. Shelter inflation is high. So
kailangan natin ng
it's a question,
imports
and you see
and
the
exports.
Cleveland measure
High.
going up, and many other measures are going up. So it's a time when we're not seeing progress, and we want to see progress, and that's really another part of why we did what we did today, and why the
Okay,
S&P
I'm going
looks
long
like it
position
does,
on gold.
is that we
Wait lang.
see it as appropriate to
Late
get
na ba ako?
the policy rate up to restrictive
shit.
levels, which would be in the thinking of the committee
Late.
somewhere in the range of 3 to 3.5% by year end.
Hindi ko nakikita yun
And then after that, you see what the rest of the SEP says. So I hope that's responsive to your question.
Hi, Chair Powell, Nancy Marshall-Genzer with Marketplace. Do you still think a softish landing is possible, and how would you define that at this point, considering the revised projections for unemployment, GDP, inflation?
So I think what's in the SEP would certainly meet that test. If you're looking at getting back down to almost a 2% inflation by 2024.
Ang tinatanong kasi nila guys, yung mga upcoming news pa na hindi pa dumadating eh.
I would call that.
Ito yung tinatanong nila eh.
Test. Do I still think that we can do that? I do. I think there's. I don't want to be the handicapper here. That is our objective. And I do think it's possible. Like I said, though, I think that events of the last few months have raised the degree of difficulty, created great challenges, and again, the answer to the question, can we still do it? There's a much bigger chance now that it'll depend on factors that we don't control, which is, fluctuations and spikes in commodity prices could wind up taking that option out of our hands. So we just don't know. But we're focused on
Bad trip,
very
late
focused
ako,
on
sayang,
getting
sumabog oh.
inflation back down to 2%, which we think is essential.
Okay, sige.
For the
Kami
benefit
muna
of
na
the
naman
public, and
dito.
also to put us on a path back to a sustainably strong
Okay,
labor
pre, good night,
market
good
like
night.
the one we had before the pandemic.
Thank you. Greg Rudd from MarketWatch. Chair Powell, I was wondering if you could talk a little bit more. Economists are worried that you're kind of hitting the economy with a sledgehammer, and that now there's even more risk of a recession than when
Another recession, guys.
path of rates. So could you talk a little bit more about that, and what evidence would get you to stop rate hikes and maybe even reverse them?
Sure. So, as I mentioned,
Recession
financial
na,
conditions have
recession.
tightened over the last 7 months, and that's a good thing, we think. But the federal funds rate, even after this increase, is at 1.6%. So it's hard to see how that is too high of a rate. Even if we did another,
there you go.
So we're going to get here by the end of the
I'm
summer
placing
somewhere
longs.
in the 2s probably. Still, that's still a low rate.
Yeah.
So that's not a rate that is calculated to bring a recession on. And by then we'll have seen a whole lot more data. As I mentioned a couple times, the committee's views are around a modestly restrictive stance, which would be in the
Akala ko month
3.5%
niya masasabi eh.
range by the end of this year. But that's conditioned on that being the appropriate
Kasi
thing
ito yung
to do.
tinitignan nila
If we
eh.
see data going in a different direction, it'll be reflected in our policy, as you see today. We'll be watching if things go in a direction we don't expect, then we're going to adapt. And I would say this is a highly uncertain environment, extraordinarily uncertain environment. So again, we'll be determined and resolved, but flexible.
Bale guys, kung hindi nyo naintindihan, ito kasi yung hinihintay nila. Kung ano ba yung kumbaga parang humihingi sila ng hint kung negative ba yung susunod na Q1, na Q2, which is i-release yun sa July 28. Okay? July 28 po siya. So, ang mangyayari, kapag ito po ay negative, yung susunod na ito is negative, domino effect po yun for the rest of the year. Possible, lahat po ay bagsak. Okay? Even market, lahat po yan bagsak. Okay? So, expect nyo ang cryptocurrency possible to the ground ang presyo niyan. So, ito yung hinihintay natin. Guys, tandaan nyo, binibigyan ko na kayo ng tips dito. Pag yung Q2 natin, this year, pag yung second quarter natin nag-report ng negative, which is negative tayo ngayon, negative 1.8 ata yan, pag ito nag-result pa ng another negative, possible guys, bumagsak lahat ng market. And that is the time na i-announce nila na recession na. And there you go guys. Running profit of $2. Oh, di ko narinig kung ano sinabi.
Really, the context is this. For decades before the pandemic and the reopening, you had a world where inflation was dominated by disinflationary forces such as declining population or
I'm closing.
let's call it that.
So let's close that position.
Globalization,
What a profitable.
enabled by technology, other factors, low productivity. So, and that's how all the models work.
Tama. Romel.
Decades of data. They look at that. It's a very flat Phillips curve work, and the supply shocks tend to be transient, right?
Romel.
We have now experienced an extraordinary series of shocks.
Pwede ka na mag-partial. TP ka na. Close.
Followed by the war in Ukraine.
Sobrang taas na.
Followed by shutdowns in China. The war in Ukraine
Okay na?
having effects for years here. So
Profitable?
we're aware that a different set of forces
Yes,
are
sir.
driving the economy. We have been obviously for quite
That's
a while.
it.
But this is a different.
Okay na?
These forces are different.
I don't know kung
Inflation's
ilang trades
behaving
yung nagawa
differently.
natin.
In our thinking, it really is
1,
a
2,
question of
3, 4,
very strong
5,
demand,
6,
but you couldn't
7,
get this kind of
8,
inflation
9,
without
10,
a change on the supply side,
11,
which is fair
12,
for
13,
anybody to see,
14,
which is these
15,
blockages
16,
and shortages
17
and
trades,
people
guys.
dropping out of the labor force and things
17
like that.
trades.
So
Grabe.
that's how we're looking at it. And we've done a lot of work internally on and thinking about what all that means. The thing is, you don't know whether those forces what extent are they going to be sustained. In other words, will we go back to a world that looks a little more like the old world, or are we really going to be in a world where major supply shocks go on and on?
World War VIII.
The history is you see these waves of supply shocks, as you did in the 70s, and then they go away, and sort of there's a new normal and things settle down. But honestly, we don't know what that's going to be. In the meantime, we have to find.
So, yeah, totoo naman totoo naman yung sinabi dito, no? We're in a recession, ayaw lang umamin. Well-rehearsed answer, yeah, definitely. Sobrang totoo yan, okay, totoo yan. Bago kasi sila dyan pumasok, ni-rehearse na nila yan. Okay, possible may rehearsal na yan. Kasi nga, guys, pera pinag-uusapan dyan. Maraming magkakagulo once na magkamali lang tong si Powell, si Papa Fall. Kasi ang tawag dyan, Papa Pal eh. Kasi siya yung nagpiprint ng pera. Okay, siya yung nag-go signal kung magpiprint na ba tayo ng pera. Ganon. So, siya din yung nagpapataas ng interest rates. Siya mismo. Yung nakikita nyo sa screen, siya mismo yon.
Treasury issuance is down quite a lot from where it's been. So I have no reason to think markets are forward-looking and they see this coming. I have no reason to think it will lead to illiquidity and problems. It seems to be kind of understood and accepted at this point.
Okay, there will be the last question, guys, for tonight.
Mr. Chairman, Mark Hamrick with Bankrate.
Okay na?
Wonder what your
17
assessment
trades, guys,
is
all
about
win.
the outlook for the housing market, given the years-long increase in home prices and now the sharp rise in mortgage rates. And all that, of course, given the heightened sensitivity around the housing market, given the fact
Housing
that it was
utilities, guys,
a
CPI.
trigger for the great
Taas,
financial
all-time
crisis
high.
over a decade ago. Thank you.
Sure. So rates were very low. A good place to start is that rates were very, very low for quite a while because of the pandemic and the need to do everything we could to support the economy when unemployment was 14% and the true unemployment rate was well higher than that. So, and that that was rates are low and now they're coming back up to more normal or above levels.
Okay, so wala nang kwenta yan, guys. Yung housing, housing loans and mortgages, ayun na yung katulad ng pinag-uusapan nila noong 2008. So, nahingi lang. Kasi yung mga ini-interview dyan, yung mga nag-i-interview, gusto nila maging ahead. Okay, gusto nila maging ahead sa news. Kasi tignan nyo itong Forex Factory natin, guys. 2:30 pa lang. Okay? And gusto nilang malaman tong mga to agad-agad. Tingnan nyo yung mga tanong nila, wholesales. Tapos monetary policy kanina, unemployment rates, tapos yung building permits, housing, ayan na yung housing, tinanong na rin tong natural gases price. Okay, inaalam na nila para magkaroon na sila ng hint, para mamaya, pag nirelease yun, ahead of time, makapag long or short sila. It depends on kung ano yung sasabihin ni Papa Pal. Okay?
Carefully.
So,
you would think over time, I mean, so there's a tremendous amount of supply in the housing market of unfinished homes. And as those come online,
walang tumitira.
Whereas the supply of finished homes, the inventory of finished homes that are for sale is incredibly low, historically low. So that it's still a very tight market. So prices may keep going up for a while, even in a world where rates are up. So it's a complicated situation. We watch it very carefully.
So yeah, that's very much it.
I would say if you're,
all-time high, lahat ng
somebody or
lahat
a
ng
young person
CPI,
looking to buy a home,
lahat all-time high.
you
Yung
need a bit
housing
of a
natin,
reset.
guys, tingnan nyo
we
naman,
need to get back to a place where supply and demand are back
almost 300,
together, and where
all-time high.
inflation is down low again, and mortgage rates are low again. So this will be a process whereby we ideally do our work in a way that where the housing market settles in a new place and housing availability and credit availability are at appropriate levels. So, thank you very much.
Okay, guys. So, yeah, that's it. Nakuha na natin lahat ng answers. Nakuha na natin 17 trades, all wins. Okay, so wala tayong talo tonight. So, meron lang tayong break-even. Okay, meron akong break-even sa kanya. So, I will not count that as a loss. That's break-even. So, yeah, so ang na-trade ko tonight is gold, S&P 500, and Bitcoin. Okay, nag-trade naman tayo sa Bitcoin kanina, na long and short natin siya. So, dalawa lang ang na-trade natin sa Bitcoin. So, yeah. So, see guys, ganito siya. Okay, ganyan siya lagi gagamitin, ganito siya lagi kapag ka, nice one guys, nice one. Congratulations, this is your first FOMC meeting. Yeah, every month po nangyayari yan, ha. Every month po nangyayari yan. And possible, let's wait for another month ulit, and possible madaling araw po ulit yan, okay? So, iti-trade natin siya na iti-trade, and then possible next, ayoko muna kayong isabay, okay? Ayoko kayong isabay dito sa FOMC trading na to, napaka-volatile niya, napaka-bilis ng pangyayari, lalo na if hindi nyo naman naiintindihan yung mga sinasabi niya, okay? Mga sinasabi niya about sa monetary policy, okay? Inflation rate, indicators and all that. So possible mayayari lang kayo, if hindi niyo siya kayang intindihin agad-agad, kasi pabilisan yan okay? Pabilisan ng galaw yan, pabilisan ng pindot yan. So yeah, what a profitable night. FOMC, this is my first time, okay? This is my first time trading the FOMC ng ganitong live, okay? Ng live, ha? Kasi last time na FOMC trade ko, talagang long lang ginawa ko, hindi ko naman siya binantayan, natulog na kasi ako nun, okay? Pero yeah, grabe. So anyways, tomorrow's live, i-explain ko kung ano nangyari, ano yung breakdown dito sa FOMC. So, kaya, kung paano namin siya ina-trade ng ganyan. Volatile siya, nag-release ng 75 yung BP ng inflation, ng interest rates, okay? and then biglang nag-dump si gold, tapos biglang sumabog ulit. So, bakit kaya? No? Bukas, itatopic natin yan sa live. So, yeah, that's pretty much it, guys. Thank you so much for watching. That's your FOMC news. That's your FOMC trading session. So, yeah. Let's do this every month, guys. Let's do this every month. Kailangan ko lang ma-explain sa inyo to tomorrow para next month, okay? Para next month po is kasama na kayo, okay? Kasama na kayo. So, tuwing kailan po yung FOMC, punta lang kayo dito sa FOMC News, okay? FOMC News, and then punta kayo dito sa investing.com. So, ang next FOMC po natin will happen on May. Okay, May na po tayo. Okay, sa May 4 na po tayo. Sa May 4, next few months. Okay? So, sa May 4 na po yung susunod nating July. Actually, July pala. Sorry, May tuloy. Pabaliktad pala to. So, July 27, okay? That's our next, And then, tignan nyo ha. Guys, actually, yung dalawang magkasunod na yan. Sorry, May 4 tuloy. July 27. And then, yung July 28, doon na natin malalaman, guys. Okay? Doon na natin malalaman kung recession na. Kinabukasan yan. Okay? So, yung kaninang pinakita ko sa inyo, yung GBP na to, sorry. Makikita ko lang sa inyo. Para ahead of time kayo, total. Tignan nyo 28 viewers lang kayo dito. So, gusto ko na kayong bigyan ng tips, okay? Gusto ko na kayong bigyan ng tips. Kapag sa July 28, negative yung result ng Q2 natin, automatic lahat ng position nyo will be short position. That's our new, and i-announce na yun mismo ni Papa Pal mismo dun sa meeting kanina, na ganun-ganun din, na we're in a recession. Pag ito po ay nag-negative sa July 28. So, tandaan nyo ha, meron tayong FOMC news, July 27, and yung recession announcement will be on July 28, kinabukasan nun. 8 AM po yun. Okay? So, that's pretty much it, guys. Thank you so much for watching, and I hope you're having a great night so far, and great morning, guys. Good morning, guys. That's it. Thank you so much. Bye-bye. Peace out.